Hello, everyone. This is Yuan Yu Perspectives. Today, in just a couple of minutes, we will delve into the political maneuvers behind the U.S.-Japan and U.S.-EU trade agreements. Trump claims to have secured a commitment from Japan to invest $550 billion in the U.S. However, on July 28, the Japanese government clarified that this is not an investment, but rather loans or guaranteed loans, and there is no agreement on 90% of investment profits going to the U.S. The Japanese government emphasized that if it is a loan, the expected benefit should be interest. Furthermore, even if there is an equity investment component, it only accounts for 1% to 2%, with the vast majority being loans and loan guarantees issued by Japanese government agencies, such as the Japan Bank for International Cooperation and the Japan Export and Investment Insurance. Similarly, the U.S.-EU trade agreement, according to European Commission President Ursula von der Leyen, has the EU committing to purchase $250 billion worth of American oil, natural gas, and nuclear fuels annually over the next 3 years. However, the reality is, the EU's current annual energy demand from the U.S. is not that high. In 2024, the EU imported about $75 billion worth of energy from the U.S., and to meet the $250 billion annual target, the EU would need to triple its purchases. Would EU member states abandon their much cheaper existing energy supplies to triple their purchases of more expensive American energy? Would this not have a negative impact on the EU's overall competitiveness and the burden on its people? Moreover, many EU companies have already signed long-term supply contracts with countries like Norway, Qatar, Algeria, and Saudi Arabia. Breaking these contracts could lead to significant financial penalties and potential legal disputes. Where does the EU have the political power to require private companies to breach their contracts and switch to more expensive American energy, and then face the double whammy of breach penalties and higher energy prices, which would erode the profitability of these private companies? EU officials have stated that the agreement signed with the U.S. is not legally binding. This is a typical style of European and American politicians. Making grandiose signings are often just memorandums of understanding, many of which lack binding force. Most importantly, the U.S. itself has significant supply capacity issues. Industry experts point out that current U.S. liquefied natural gas export facilities are already operating near full capacity. If the EU's purchases were to triple, even with companies expanding facilities in Louisiana and Texas, it would take several years to achieve this, especially considering the U.S. construction speed has been slowed and made less efficient due to the large-scale deportation of immigrants. By then, Trump might have been out of office for a long time. Research firm Gavkal even more pointedly notes, even if the EU were to purchase all the U.S.'s crude and LNG exports, based on current prices and U.S. LNG export capacity, the annual value of these purchases would only be $141 billion, far from the $250 billion touted by politicians. As a movie line puts it, you only imported half a pound of arsenic last year. Where do you get a full pound to sell? Therefore, many of the things Trump claims will need some time to see the results. Many of the so-called constructions or achievements during his first term, when reviewed later, turned out to be less than 1% of what he promised, such as the Foxconn plan in the U.S., which was supposed to be a wonder of the world, but the $10 billion investment turned into a mirage, not to mention his frequent boasts of multi-billion-dollar deals. His grandiose ambitions, love for vanity, and constant lies mean that his promises often fall short, with many failing to materialize even halfway through. That's all for today's content. This is Yuan Yu Perspectives, and we'll see you in the next video.